Hello YouTube, this is Michelle, the Future Prop Trader. So today we're going to have a quick video on how to find FVG, fair value gap. But I'm doing this because a few of my friends are asking on how can they find the fair value gap. But I believe that you guys will also benefit from it. So therefore, I'm doing it right there on YouTube so you can see it. We're gonna make it quick and easy. All right. So I'm no financial advisor. Everything I say here is for entertainment purposes only. All right. Let's quickly look at what's going on here. Now, what is a fair value gap? Let's quickly look at the definition. We're not going to waste too much time on the definition. It's not important. The fair value gap is the meaning of the difference between, all right, that already threw me off. So let me just explain it on the little graphic here. So a fair value gap is pretty much a combination of three candles where there is a gap between the three candles. So, and it is representing an imbalance. The gap that is between the three candles is an imbalance either on the buy side or on the sell side. Like for example, if we look at here, these three candles, so remember I said it's made up of three candles, but you're looking to find the fair value gap in the middle of the candles, the second candle between the three candles, right? So what you're looking for as a characteristic to find it is this little, if you see a wick at the top right there, if you see another wick here, if they don't meet each other in somehow, some way, they don't cover the entire space, then the gap between the two wicks are the fair value gap. And it is an imbalance of the buy side, meaning there's a lot of buyers that come in and pushing price, but there wasn't enough sellers to sell to them, so therefore it create a gap in the candle right there. All right, remember what I just said. Fair value gap is combination of three candles, and then you're looking for a gap between the second candle and the last candle. So the first candle is right here, this is the middle candle, the second one, and this is the third one. So you would mark from this wick to that wick, and the space between there is the fair value gap. Now that's all you need to know as far as when you look at the graphic here. So we don't need to go through all that. So now let's go to the charts so I can show you fair value gap and how do you use them. You can find fair value gap in any time frame. Any time frame. The higher the time frame, the more important the gap, the fair value gap is. The stronger it is when price come back to it. Why you look for them is because when price come back to those area, they tend to react right away. Like they would come down to the gap, to the fair value gap, and then bounce back because there's still some buyers, probably orders that were still in this area somehow. And the other thing, the other way you use them is they act as magnet. If price is up there and there's a fair value gap down here and they were going up, they would come back sometime just to test the fair value gap before they move back up. All right, let's find some fair value gap in the chart right now. So this is a, I said, remember, I said you can find them in any time frame. The higher the time frame, the better it is. I personally, I'm a day trader, intraday. So I usually look for the one in the 15 minutes and the 5 minutes. And on weekends, I would look for the daily fair value gap and weekly fair value gap because they will act as magnet for price to go after it, either on the upside or the downside. So this is an example here. Okay, here's one simple example right here, right? There is a fair value gap right there that you see the pink box that I drew here. That's a fair value gap, right? And you can see there's a three candles, 1, 2, 3. So the space between the three candles, the wick coming from the candle, this candle here, is not close to that wick of the first candle that is down here. Since that happened, so the gap between the two of them is a fair value gap. And what you when you look for them, you look for them close to an area of support or close to like an EMA, like the 21 EMA or the 9 EMA, whatever. You don't use them just alone. You need to find some other confluences in order for you to make it work. such as, I'll give you an example, like I have a profile here, right? If I see the profile is right there, and then there's also a fair value gap right on top of that profile, which in this case it happened to be on the 15 minutes. This, what I'm showing here, right there on the smaller chart here, that's the 15-minute chart. There's a fair value gap there. The poke, the point of interest on the profile, is also in the same location. And so therefore, I would be, if price were to come back here in a hurry, I would be looking to see if I could find an entry for a bounce on this area inside the fair value gap because it's close to the poke and the fair value gap is also in there. Most likely you will find buyers in this area that will push price right back up. So that's one example. Now let's go back again to the 5-minute and then let's look for another one where there were some fair value gap. Now there's a fair value gap right here, right? But it hasn't been used yet. You can see if I go all the way, it's still, oh, actually price come close to it but did not hit it, right? So let's keep moving and keep looking in the back, see if we find something where the fair value gap being interact with. Okay, right here, there's a fair value gap, hasn't been interact with, right? This is the 5-minute charts I'm looking at, right? If during the daytime, right, intraday, how do I know this is a fair value gap? There's a huge candle right here. This red candle have a wick, and there's this one here. It has a wick. The space between the two of them is the fair value gap. I would draw a box. I would go and take my box here, and then go like this, my rectangle box, and go like this, and waiting for price to come back. Now, I wouldn't just take a trade on it unless I see there's something else close by. For example, you look to the left, see if there's support not too far away from the fair value gap, or the VWAP or the 21 EMA is not too far from it too. So I would get ready to take a trade. If it's not too far from a diamond area, another area like what some ICT trader call order block, like in this area here. This is an order block. This fair value gap, if during the day price would had come back to this area, I would be looking to take a position because there's three things that would be in combination that would let me know that there's a 70% chance that it will work out. All right, I hope you guys understand and see what is a fair value gap. So, and you see, I'll give you a few examples. Let's go back and look at for one more before we move on. Let's see if we find any here. Today okay. Right here, you see this area here, there were a fair value gap right there. And if, let's say these prices didn't happen yet, right? So you would take your box when you see that fair value gap created in this area. This is 1, 2, 3. Fair value gap was here. So you would create your thing here, and you see what happened. Price came back and entered the fair value gap, but did not close any candle outside of the fair value gap. If it weak outside the fair value gap still good until you have a candle close outside the fair value gap, right? So that's how fair value gap. Now, fair value gap don't only exist on the upside move, right? You will find them on both the downside too. There's one right here. Earlier, there was one here before price did a bunch of other things, right? This is, it was right here. 1, 2, 3 candles. The wick is right there, and it did not come and cover the entire candle down here. So therefore, it created a fair value gap. What happened in this area? Price came back to it and then go down. Came back to it, go down. Came back to it. Finally, it breaks to it, but it still couldn't stay above it. So you guys got it, right? So I think you guys understand what is a fair value gap. Please hit the like and subscribe. I would like to have some more subscribers. As you can see, I don't have that many subscribers. I would love to have some more, and I'm targeting 1,000 subscribers for now, and I think you guys can help me get there. All right, so that's it on the fair value gap. Remember, it works on any time frame, and the higher the time frame, the more stronger the fair value gap is. All right, so that's it. Take care, and I'll see you guys in the next video.